Hello, good evening. It's Adil Fazal here, market analyst at CFDs.com, bringing you a European market insight for Monday's trading, the 14th of December 2015. Okay, let's try and interpret exactly what is expected to come into Monday's trading session and beyond. Okay, now this video is being brought to you by CFDs.com. Be sure to visit the website www.cfds.com for your trading needs, and certainly apply for that 25% cash bonus offer as well. Alternatively, you can visit the educational site where I post my videos and charts, etc. on a daily basis. My insight at www.cfds.education. Okay, now let's try and decipher the Fed week. Okay, now in order to assess the European indices, basically the whole market it revolves around the Euro USD, and the Euro USD obviously revolves around the Bund. And it's very important to understand the parallels or the inverse relationship between the two to a large extent. Okay, so basically you have the Bund trading now at the fib 75% retracement. We've bounced off that pivot low, the 200 MA, and this key diagonal trend line resistance or support, should we say. Okay, so now the conundrum is this. Okay, now if I bring up a chart of the Euro USD, you can clearly see that we are struggling to go up or move past the 200 MA. Okay. Now, the weekly chart of the Euro USD itself has put a potential base in, whether or not this is a true double bottom or whether or not we continue to make a lower low, given the fact that Mr. Draghi has pledged his QE and unlimited QE speech, etc., etc. Even though he has failed, obviously, to meet expectations thus far, and you have a lot of hawks that are anti-QE, namely Germany. Okay, still, regardless. Given the weak data that we've seen out of Germany last week as well in terms of exports, imports, there really is not. And also, don't forget the fact that the commodities rout last week equals deflation. Okay, so if deflation was a concern not so long ago, and the hawks got their way at the ECB, I think things are going to change quite drastically now. And the doves will certainly get their way, given the fact that you have this commodity route. Commodities, as we all know, a drop in price of oil, drop in commodities itself overall, given the fact that you can see the CRBQ if you are those that are following the actual index itself. If I bring up a daily chart, this is the GCC. This is also a commodity index, very similar to the CRBQ. And you can see that it's at potential double bottom. Okay, so certainly is a concern in terms of commodity route, and that equals deflation, and therefore deflation equals a concern for the ECB. And if that's a concern for the ECB, then you know what's coming next. Okay, given the fact that we have the Euro USD now into its resistance zone on the daily chart, we have the resistance zone on the daily chart itself. Okay, so we have the daily chart into resistance. Now, that basically means that the daily chart of the Euro USD is into its 200 MA, and therefore you are looking at a pro-QE trade, i.e. European equities higher, Euro lower. Now, what does that mean for the Bund? For the Bund itself, that means that we are potentially going to go past the fib 75% resistance, break out the 160, 161, and certainly move higher. That will obviously send yields lower, and that will cause the Euro USD to certainly move lower as well. Okay, so... You okay? Yeah? Go on, be a good boy. Go on. Daddy's working. I'll speak to you soon, okay? Right, so basically we have the Euro USD obviously into the fib 75% resistance. Now, if the Bund starts to reverse here, given the fact that you have this bearish candle and we're consolidating within that bearish candle, then you have a concern. Now, if you go to the weekly chart of the German Bund, you can see that one would argue here that this could potentially be a bear flag, okay? And we could see a move lower. We are in an inside bar. But how many times have we negated the inside bars? Now look. Bearish candle, inside bar. Bearish candle, inside bar, negated. Bearish candle, inside bar, negated. Bearish candle, inside bar, negated. Bearish candle, inside bar. Are we surprised to see the German Bund testing the 162 level? I think no. Okay. I think no. Okay, so that's my understanding, my interpretation. Now, given the fact that Mr. Draghi is committed to his QE program, and it's very rare to see a central banker obviously give up, etc., and also given the fact that you have this deflationary mindset now with commodities plunging, etc., which is not going to improve the inflation picture and the backdrop, then you are going to look at more QE, and those hawks are now suddenly going to turn into doves. Okay, and therefore you are looking for a weaker euro. Also, given the fact as well, given we have Miss Yellen obviously with a hawkish tone this week, whether or not she going forward she sounds more dovish, and that obviously causes the dollar to fall. That's a different story altogether. But one would presume that the euro would weaken, and therefore the actual bond yield, the German Bund, will continue to move higher, etc., etc. Okay, so again, that's an interesting scenario taking into account everything. Okay, now in terms of the economic data coming to Monday's session, we have CPI from Italy. We have CPI from Italy. We have European industrial production data, really, from the European side of the equation, and that's basically about it. That's going to be the main market mover. Now you do have the German, should we say, the UK retail price RPI and PPI. So inflation data is going to be quite important there. Okay. In terms of Germany, we have the ZEW economic sentiment survey. So again, current sentiment and economic sentiment. Again, that's going to be key. Then you have ZEW for the Eurozone and employment data as well. So a raft of economic data. Now you also have the BOE quarterly bulletin as well. That's going to be interesting. But from our understanding, that certainly is from the European side of the equation. We have CPI data out of the US as well. So again, and Red Book sales, etc. And that's going to be quite imperative as well from going into Tuesday's session. So for Monday, all we're interested in really is Eurozone industrial production data and Italian CPI. So that's going to be the data for Monday. And then Tuesday is going to be even more interesting with regards to inflation, etc. out of the US. But for now, I expect going into Sunday night and Monday session, weaker euro, and looking at a potential rise in equities, helped by the Chinese economic data. That's my understanding. Okay, so let's bring up the chart of indices now. Let's just bring up the chart of the German DAX. Now, the German DAX has this H&S formation. So if we see the euro starting to rally and the continuation, the euro rally post the weaker US data on Friday, then you are going to see this H&S completed at the 10,140 level. Now, after hours, the actual markets did flush quite substantially, and we were down quite heavily. I think we were testing the 10,300 level, if I'm correct. Let me just bring up my chart quickly and just cross verify. Okay, so on the German DAX, the FTSE was trading at 5,920, and the German DAX we were trading. I don't have the German DAX here at the moment, which is quite strange. Just 1 second. Yes, we were trading 10,250, as low as 10,250. So again, your 10,200 level is key support. Previous resistance equals support is going to be crucial. You do have an unfilled gap below as well, and obviously bear in mind you have the 10,140 H&S target in German DAX. So again, that's going to be quite interesting. Now, bringing up the weekly chart, the German DAX itself certainly is weak given the fact that we have this lower high. Again, that's a concern, and that certainly needs to be taken into consideration. Again, like I said, the 200 MA on the euro is pivotal. The German Bund is pivotal. The German Bund starts to hold that 75%, starts to reverse lower. Certainly isn't looking good. Okay, that's all I can say. That will obviously cause the German Bund to fall, yields will spike, the euro will spike, and that will hurt European equities. And that will be done by hawkish commentary and maybe a dovish Fed. Okay, so going forward. So again, they are the two wild cards that we need to be aware of going into Monday's trading session. But given the fact that we have Chinese data, I am expecting a short squeeze. Stronger Chinese data will certainly trigger a short squeeze in the interim. Okay, so bear in mind, daily chart H&S formation, looking at the larger time frame. 60-minute chart, we're in absolute no man's land until we get to this 10,180 level, and before you see any type of support on the German DAX. But again, based purely on fundamentals, given the stronger Chinese data, retail sales certainly stronger, you are looking for a short squeeze and a pop here. 10-minute chart, the German DAX, you already have an inverted head and shoulders formation active. That's triggering off an inverted a short squeeze, and therefore you are looking at 10,500 on the German DAX very, very quickly. That's my understanding of the situation, and that's led by the fundamental catalyst, which is stronger Chinese data. Okay, now looking at alternative indices, looking at the MDAX, just to cross verify the strength and the weakness in the German DAX itself, it's into diagonal trend line support. So again, it certainly adds to the argument that the German DAX is going to rally. Looking at the Tech All Share Performance Index, which is a key index that I observe, and this is again is certainly confirming to me that it's into horizontal support, and therefore we need to see a bounce. So the German DAX, from its alternative indices, it certainly is looking for a potential move higher. Now, looking at the actual volatility index of the CAC, this is an interesting scenario here. Looking at the daily chart of the CAC volatility index, you can see that we are putting a potential topping tail and looking certainly weak. Now, looking at the 60-minute chart, you can see topping tails here, and you are into that horizontal resistance zone here. So, again, the volatility index of the FAIR index is certainly indicating to you that you are looking for a potential reversal. Now, bringing up the CAC 40 now. The CAC 40 on the 10-minute chart, same type of pattern, inverted head and shoulders target. You are looking at 4,600 on the upside. Bringing up a 60-minute chart of the actual CAC itself, and you certainly seem to be making lower lows and lower highs, and therefore you are expecting a bearish price action at this current juncture. Now, looking at the 10-minute chart, we've already shown you inverted head and shoulders formation. The daily chart states that there is a potential unfilled gap below that needs to close at 4,460. But based on pure fundamentals, given stronger Chinese data, I am looking for a short squeeze. Okay. Now, if we cross-reference the CAC 40 with its peers, so if I bring up the chart of CAC mid and small, this is the one that I always observe, and I was cross-verify, you are already needing to gap fill support, and therefore you are looking for a bounce. Looking at the CAC mid 60 only, now let's just bring up the daily chart, and again you are into gap fill support. So again, similar with the DAX scenario, the CAC its peers, which we cross-verify and cross-reference the support and resistance, is showing a potential bounces on the cards. Looking at the Euro Stoxx 50 now, the daily chart is into horizontal support at this key level at 31878. I'll declare that I am long Nasdaq and long Euro Stoxx from Friday, so I'm certainly in the bullish camp, so I'll declare my bias regardless. 60-minute chart, you are into horizontal support, and therefore that supports the argument that the German DAX is going to rally. The 10-minute chart has an inverted head and shoulders formation, therefore you are looking for an unfilled gap at 3270 to potentially close. Okay, again you are looking at 3290 and then 3310 on the upside. So, cross-referencing that now with the S&P 350 and the Euro Stoxx 600, or the Stoxx 600 should I say, looking at the daily chart, you are into horizontal support on the Stoxx 600. So, therefore, you are looking for a bounce in European indices. That's my understanding and interpretation thus far. Therefore, I am looking for a rally going into Monday's trading session. Cross-reference that with the S&P 350, Europe 350. Let me just bring that up for you as well, as that is always a good barometer of strength and support. And abracadabra, we're into horizontal support, and therefore that would add argument to a European rally. Okay, so given the fact that there's an inverse relationship between European equities and the euro, then one would have to presume and assume that the euro will now still move lower, the German bonds move higher, and European equities move higher. Okay, you are looking at a potential support being made for the actual price of oil itself as well. Your copper certainly has already shown strength, and this is going to be very interesting. Okay, although bear in mind the dollar index itself does have a triple bottom or a quadruple bottom, etc. You can call it a base being built here for a projection higher. That means a lower euro, and we all know what happens next. Okay, you have an unfilled gap up here on the dollar index, and you are looking to close that and looking for dollar strength going into obviously a Fed meeting, etc., etc. And that means a weaker euro. Weaker euro helps European equities, and we all know what happens there. Okay, so an interesting scenario. But first and foremost, bear in mind stronger Chinese data. Therefore, expect a gap higher on Sunday night. I wish you the very best in your trading this week. Be sure to visit cfds.com, open up a trading account, apply for that 25% bonus offer, and come trade with me on the live analysis service. Those of you that are not aware of the live analysis service, it's a service that I run where I share my trades in real time. Okay, all trades are shared in real time. If you go to my website www.inter-market-analysis.com, be sure to sign up for it. You can click on live analysis service icon. If you want to opt for the 2-week trial program, you can certainly do so there. It's a free 2-week trial to all. And if you wish to remain on the program on the WhatsApp group and emails, etc., and get live analysis and live setups, etc., and commentary, etc., then all you need to do is click on the payment sign, and you can certainly see the payment details there, and you can join the live analysis service on a month-by-month basis. Okay, I think that's a market wrap. Wish you again the best in the week ahead. Maintain your good risk management and good obviously money management, and you will do well. Goodbye now.